It's Money Monday, and even though it's February and we're heading into the prime home buying season, it is just around the corner. We call in Hale Walker, Senior Vice President, Michigan Mutual, the mortgage company, offices throughout Metro Detroit, and really, you have grown since we saw you just a couple of months ago.
We have. We're now in 39 different states, Murray, and I'm proud to say as we talk about financing in the state of Michigan, we've changed our name to Michigan Mutual.
Okay, so set the stage for us right now. Let's talk about interest rates and mortgage rates, because when people talk about homes, that's the one thing that they think of first. We had a great 2012. Rates were really low. They're still really low, but they're on the way up, aren't they?
They are, but in a nutshell, I'd tell you that there's really nothing to worry about, in that even if interest rates go up, which I think there is a belief that the government is going to less support the housing market, but rates are so low that it's going to be the lowest in our lifetime. So
okay.
There's still a perfect time to act.
So we can still say at historically low rates.
Absolutely.
All right, let's take a look at some of the things that we see as a backdrop to the mortgage rates in the home buying season. For example, when we take a look at what's going on out there today, we see that in this area, over the past year, prices jumped 26%. Not back to where they were by a long shot, but hey, that's pretty good, and some people could probably sell a home that they bought a couple of years ago and make a lot of money on it. And the reason is because inventory is down and building is up. Why is inventory down?
Well, what we're seeing is there's really two different pieces of inventory. If a home is in good shape and that's being sold, that's going to be different than maybe a home that has been abused, that has gone through foreclosure. So if the home is in good shape, we're seeing people lined up to be able to make an offer to purchase that home.
What about qualifying for the home? It's getting harder.
Well, I think the indication that pricing is going up is also a perfect indication that the borrowers in the state of Michigan are stronger. You know, we've really been known for tying into the automobile industry. The automobile industry is strong, employment is strong, savings is strong, so we're seeing people in a pretty good position to be able to finance their homes.
All right, let's take a look at what people should do if they are in the housing market. First of all, fix credit issues, and you can do this with a lender. Make small changes and shop for customer service. Let's talk about that one at the top. Fix credit issues with a lender. You're taking on a different kind of role than many traditional mortgage lenders have taken on, and others are doing it too.
Well, here's one of the things that's happening, Murray, right now, is the regulation that has happened since the collapse of the finance industry. There is a real demand from the federal government that lenders need to look at the consumer's ability to pay, and they can be held legally responsible if a foreclosure happens and the lender didn't make absolutely sure that that borrower could make those payments. So in turn, we have to be much more proactive, and we have to have a partnership with our borrowers.
That is huge, because that's what did in the housing industry several years ago, because mortgage companies were saying, you can come in, you don't have to show us you have any documentation, just show us the last paycheck or something, we'll get you a loan. You can do it with just the interest paid. I mean, that kind of stuff was harmful to a lot of people.
Yeah, the amount of accountability today is dramatically different than it was pre-2008.
And you say make small changes. If you make some small changes, you could gradually improve that credit score, the credit rating, so that you can get the loan that you want for the home that you want.
And that is absolutely true. So here's what happens. A borrower can't be sitting on the sidelines and being afraid to contact the lender, even if they have some problems. They need to partner up, and even if they are turned down today, what they'll find is that a strategy will be put together so that they can qualify for financing in a short period of time.
All right, so you have to know who you're dealing with. You have to look at their customer service, because that's what you're buying into, not only a mortgage company, but something with customer service for you to have that advantage as a buyer or seller. Very quickly, what's the biggest mistake a buyer is going to make?
Trying to do something on their own, without a doubt, whether they are purchasing a home or whether somebody is refinancing. They have to have a trusted lender by their side, because there's just too much. Interest rates themselves are tied to someone's credit, their ability to pay, and the collateral itself.
Biggest mistake the seller is going to make?
I think sitting on the sidelines and not recognizing that pricing today is the new normal. That it's not what prices were going for in 2007. And
it's an adjustment.
It's absolutely an adjustment.
But we're getting there, and values are going up, and that's a good thing. Hale Walker, Michigan Mutual, offices in Southfield, Port Huron, Birmingham, Plymouth, Brighton, Livonia. I think I got them all, didn't I?
You did.
Thank you for being with us. More information from his office on our website and a link to his, myfoxdetroit.com. You'll find it on the Money Monday page. See you tonight at 5 o'clock. Hey, is it time to read the bowl of bacon from the new printer in the newsroom?
Not quite yet, Murray. I want to ask Hale a question, if that's okay.
Okay, personal information here, yeah, step right in the office.
All right, Hale, down in Atlanta, I know, and this is happening across the country, banks are buying up and foreclosing on people, buying up distressed properties, and then turning right around and renting right back to the homeowner. It's inflating a new bubble, according to an article I read. What's your thoughts on that happening here?
They are